What a day. Okay, we got Rocco back. I think that's what that's what was the market speak today. So today, big Fed day. The Fed cut 50 basis points. It's what we kind of thought once the market prices it in. The Fed pretty much wants to stay in line with what the market's expecting, not to throw it off. People thought 50 would, cause panic and calamity. We'll see. We'll take a look at the intraday chart. Interesting moves today, a lot of back and forth. We got the zigzag that we were talking about. It's interesting. Bonds sold off today as they cut 50 basis points. So if you think about it, we'll take a look at the chart, what's going on with the long end and what the implications are. Silver got a hit today, with the move with yields. Gold hit an all-time high, as did the SPY. So everyone was as rich as ever at 2 o'clock before he started speaking. The equal weight, highest ever valuation, and as well as industrials, materials, a lot of other sectors. So let's do split screen first with the note, and then we'll see what happened today. What really moved. It was an interesting day to digest. So again, what we were just opening with. So bonds and silver fall as the Fed cuts 50 basis points and new all-time highs for SPY, gold, equal weight, industrials. TLT fell by 1.3%. SLV, silver, down 2.5%. And some interesting moves. New 52-week high. Excuse me, my voice was cracking like Peter Brady. For Homebuilders and the junior gold miners, the trend is still high with these. The force is very, very strong with these. So we'll take a look if there's any setups there, as well as leaders for the week, small cap, specifically through this ETF, retail and regional banks. So this doesn't tell the full story of just today. Of course, it's the entire past 5 days. And this for the first time, I don't remember. I've been doing this for months now. I can't remember. I just left the title, what I typically look for, top 5 losers the past 5 days, as I look for the top 5 gainers of the past 5 days, and there's not a one. So tells me totally risk on. So I actually did buy today. I did some buying. I bought some option spreads. Sold October, bought December in Japan and healthcare. So putting my money where my mouth is, quite literally, although I didn't eat healthcare and eat Japan. Although we did have sushi last week. So yeah, for the top 5 losers the past 5 days, that's absolutely extraordinary. I like the setups on those two. They are not mentioned here. Healthcare, I don't think I see it. And there's no Japan. So but I like those trades. I want to get on board with those. And I did it expressing through options. Okay, so let's first go through the intraday chart on the S&P. Let's see what happened here. First of all. All right, so here, let me go take out the single set. All right, so here was the market open. Typical market does nothing, going to the Fed meeting. Your VWAP are pretty much what the market agreed, what the market was according to all the day's trades by volume, by dollar weight, was 562.93. That's the number going into the Fed meeting. It's that orange line marker before the 2 p.m. meeting. So 562.93 after the 50 basis point cut. I'm just going to round. The VWAP was 563. We went all the way to 569 here. That was your all-time high at 2 o'clock. And then he started speaking at 2:30. We were tugging the line. It was going back and forth with VWAP, that important number. And then we ended up flushing to the downside. Not a ton of volume running to get to the exits at 3:30. But I tell you, there was a massive amount of buying at the 2 o'clock bar. So zooming out, we've said that we are in accumulation mode. Just given with the momentum as well today, I'm going to stick with our target of September 25th and a target of right around 574, right around there. So it looks big, but here you go as well. We were talking about when you get this knock on this resistance here. You tried in July, couldn't do it, and now you couldn't do it in August as well for a whole week at that 564 level. And it's an interesting candle today with a tall wick here. So the buyers rejected, investors rejected that price of 569, ended up closing at 561 with a VWAP of 564. So it looked pretty weak. This will take some time, but our upside target for about a week from now is right around 574 or 13 points from here, which is just about 2 to 2.5% for the next week. So I think the bullishness is going to take over. And I really don't love buying small cap stocks, but there is going to be a significant tailwind to those the rest of the year because they benefit from these rate cuts. Apple benefits very different from your small, tire change guy in your neighborhood who has to potentially get, hire workers and have a different entire subset of finances that he works with. Okay. So this is the SPY. So again, bullishness through the next week or so, about 2% of upside. Let's look at what moved today. It's interesting. So TLT, crazy. So the Fed cuts 50 basis points. A big move, right? More than the expected 25, although it was 50-50 in the Fed fund probability. So this is what happened. So TLT, 52-week high the other day. Right here, it's 101.64 is where it was, and then a hard fall to 1% down. It was interesting watching like Jeffrey Gundlach talk after the Fed announcement, and basically saying that the bond market, especially the long end, is sniffing out this is inflationary what the Fed is doing, so it's going to actually not. As they focus on, the dual mandate of trying to keep unemployment low, that inflation will again try and push again right, and this is what will keep bond yields higher in the longer end, squashing bond prices. As there's no faith in the market, they'll throw more money at a recession, and that can sink you. There going to be failed auctions and no demand, thus higher yields on the longer duration side. So interestingly enough, this is what's amazing about markets. Could have told you the Fed cuts 50 basis points. I don't think your first gut would have said, TLT is going to be one of the only multiple sigma movers that's going to be lower. Typically, you would have most likely said the average bear would have, since this is the show for bears, would have said that this goes up on a day like today. So all that being said, my near-term forecast. Again, because I'm always doing 15-day cycles. Yeah, so this looks like it had a top here as well. This typically does not close TLT. This isn't NVIDIA or Supermicro. Should not really be closing above the volatility band, which is the Bollinger Band here. This was a global crash. Japan, that's why you get this kind of movement. You got it, a couple times last week. Wasn't massive, but it led to this crescendo 52-week high. I think it may sustain these high levels, but I do think you'll start to see a move over the next 2 to 3 weeks just to about 99. So not a ton, maybe 98, which would mean bond price go lower, bond yields go higher. So a little bit more of what you were seeing today. Ironically, as the markets sniff out sometimes a perverse move into what actually exists. Markets, the Fed cuts rates, and let's see what happens we get not only today but going forward. Okie dokie. And then only one other move significantly lower was silver. Silver got hit pretty well today, down 2.5%. They didn't smack gold as much. Let's take a look at the silver chart. So again, don't really love this. This had its highs back here in May. Not an awful looking chart, pretty decent. A little bit range bound, nice rising 200-day moving average. Looks a little bit top-ish here with this price action. Candles are always used best on short-term patterns. You got two closes here and then ugly a couple candles here. This looks like still, people are loving the metal, so I will want to rather be a better buyer of this. I think it'll hold above 26.70. I think this will try to target right around this 28.30. So still buy mode. I think this gave you potentially nice discounts. I wasn't tacking these on today. Like I said, I bought Japan today and I bought healthcare. Healthcare in the closing minutes. Japan actually, like a nut job, I bought in the morning before the Fed. But those are trends I've been wanting to join. I love the setups on both. They are both technical setups. I entered both on the 21-day exponential moving averages. So healthcare a touch above. I had to pay about less than 1% above that. Actually, like 30 bips above that. But I've wanted to be in there. Probably get a lower entry tomorrow, but it is what it is. We'll see what I dollar cost average. All right, top 5 gainers of the past 5 days. This might be a shorter show because there's not a ton of the moves. There wasn't anything that moved up today. They did not gobble anything. I have no losers of the past 5 days. So interesting show. Let's go to the best gainer of the past 5 days. If you had gold miners, specifically the juniors, although the bigs made highs as well. This new 52-week high, as you can see this carrot right here on the top here. But look at this ugly candle. They did not accept that $50 pricing on the gold miners. You can see all the way it settled here at $47.75. So I still think similar to silver. I think this has more buyers than sellers. I think this wants to go back towards 49.5. I think today was a little bit rich when it got all the way to that 50 handle. but I do think over the next week or so, the bullishness accumulation will continue, and this will go back towards, try to make its way towards 49.5. So $2, so not a bad move. I have to check my portfolio if I need some metals exposure, but this is the absolute best trade in the market over the past week. Second best, Homebuilders. This one got away from me. I tried to buy the ITB yesterday. I'll see if I got my chance. But the Homebuilders, a new 52-week high today. As you can see, that candle, pretty ugly. They did not accept that 125 rounding, but that 125 print, they Dikembe that pretty fairly. And all the way, VWAP was 122. They sunk a bit below there at 121. So we'll see if we get some action tomorrow. All that being said, though, very similar to the other areas. I see this being accumulation mode, but not super high, lofty targets, right around 122 over the next week or so for Homebuilders. All right. This specific ETF, Homebuilders, on rather small caps, was interesting day. They had a really powerful rally up, I think, more than 2%, and then gave back everything by the close. This specific ETF, CAF, always shows up on our scans. It moves a little bit more than the IWM. Today, flat. IWM was flat as well at the end of the day. But take a look at this. So this is the third best gainer of the past week, up 7%. Nice move off the bottom here. It's done a lot of work quickly, as it's now just within shouting distance of its rising 200-day moving average. Now, why I think this is, again, in accumulation mode, a lot of getting a bullish, sentiment for the market. What does it? SPY all-time highs. So this looks like it's going to try to target 47 nickel right around there over the next 1 to 2 weeks. So, and again, I think the small caps are likely. I hate investing in them, but I might have to do it because making money is more important when you're a trader than being right. So these companies benefit, like I said, much more. And there's going to be, performance chasing in terms of the valuation for small caps versus the bigs, of how much you want to value, NVIDIA and incorporating into SPY versus growth of small caps, or at least just the multiple premium getting elevated just due to overall bullishness in the market and easing financial conditions. So these guys benefit more. You're going to want to get involved a little bit as the year goes on. So yeah, I think a little bit for this. $47 is my target for the next week or two. So that's $1. Pretty nice, pretty decent move. Retail, the fourth best trade of this past week, up 6.5%. Today, flat. Let's take a look at the chart. This one's become back in focus. We're highlighting it more and more. Look at that. This little oopsie totally resets the chart. This is a star profile. Don't care about this bad game right here, essentially during a global crash. And then I don't care about this bad week it's had, September 6th to the 12th. I don't know, I guess that's like equivalent of like finding something on your significant other's phone. You're like, it's not that bad, and you just forgive it. This is just totally forgivable. I don't know, maybe something annoying. That's all, but maybe not, unforgivable. The highs for the group were made back in mid-May. This looks like it's, again, more a bullishness. The charts, I'm not coming in with any biasness. I'm just looking at the accumulation cycles, relative strength, and moving average growth. This looks like it's going to go towards 78.65 over the next 1 to 2 weeks. So just about here. Ugly candle today. Open right here, specifically at 76.38. It went all the way to 78 on the 50 basis point cut. When Powell's speaking, they went all the way lower. Looks like a decent spot to be in, though, over the next 1 to 2 weeks. I think it's going to 78.65. And just never short the American stock market. Like Warren Buffett said, who had most of his wealth accumulated after the age, I think, of 50 years old. We're just in the West. We buy all kinds of junk with money that we don't have. There's literally a sector called consumer discretionary, and it's the second or third largest part of the S&P 500. So that's what this country's all about. Dang it! So never short the American stock market. Can I get a thumbs up? See someone over there. If you have a ticker, let me put a ticker in there. What the hey? And the last one, the fifth best spot in the market for the past week, regional banks up 6.3% in the past week. Up today, 40 bips. Not a lot of areas were. Again, accumulation mode. I see this getting to about 59.40 over the next 2 weeks. Give it some time. And 59.40 would be just a hair inside the 52-week highs. I'm still trying to buy the KBE, which has better returns than this. Yeah, but just better overall charting than the KRA risk adjusted. Okay, so top 3 absolute trades of the past 5 days. If you're in the gold miner juniors, up 8.5%, Homebuilders up 8%, and the small caps up 7%. Congratulations. Those are the absolute winning trades of the marketplace. And ooh, we got one. Okay, MMSI. I have no idea what this is. Let's take a look-see. It is not an ETF, obviously. This is Merit Medical Systems. And for everyone else that does not know what this is, probably, what is this? A healthcare equipment company, about $6 billion on $1 billion revenue. Pretty decent. So immediately, Brandon, thanks for the ticker. Yeah, just all I'm looking at right here is this thing got its legs underneath it and is a place I want to be as of April 23rd, just technically speaking. And this thing, hot dog, as my son watches Mickey Mouse Clubhouse, hot dog, hot diggity dog. This thing made a 52-week high yesterday. Like to see that. Very new momentum. And it was just flat to small up today, up 0.2. Superstar behavior here. Very nice blue shaded areas. A really tough time here. Ugly earnings report. It looks like February 28th. And then led to being oversold less than a month later. This is going to be an accumulation mode, similar to what I had for pretty much every chart that we looked at today. But the target here is 100. I like that it's getting near to that psychological point of 100. Usually happens with stocks, and take the tailwind of the S&P 500 all-time highs to your back. This one looks good. My near-term target for this is probably, I have 100 for the upper Bollinger Band here, even with expansion. So not a ton higher than here, but definitely a great place to be in. Yeah, it looks like it's got a date with 100 over the next 2 or so weeks. All right. If anyone else has any other tickers, that will be it for moi. And yeah, crazy day. We will see how tomorrow unfolds, and I will be back Friday for a to recap the whole dang thing. All right. Peace.